Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. And this is another episode of the Mortgage Guy Podcast. And this is the one where you get to learn about Family Opportunity Mortgage through Fannie Mae. Now, this isn't a new program, but it's one of those things that we don't talk about very often. And I rarely see it utilized. And I think there's a little bit of a fear behind it on the lending side because it could really open up an opportunity for fraud. Wrong questions are asked, or if the incorrect documentation is collected. So let's talk about what this is. So in a nutshell, it goes for, first off, we'll talk about parents buying for disabled children. So let's say you have a child with disability, they're of age, they want to try to live on their own, and they just can't qualify, whether they're, obviously maybe they don't have a full-time job, maybe they don't have any credit established or what have you, right? And the parents usually take care of their finances. Well, the Family Opportunity Mortgage gives the parents an opportunity to actually purchase a home on behalf of the disabled child, okay? But in the first thing that comes to mind is, all right, well, we got to buy it as an investment property because I, the parent, I'm not going to live there. Well, that's where this program comes into place. Actually, it allows you to go conventional financing with 5% down. Yep, 5% down. You can obviously do more if you wish. And it's posed as the parent being the owner-occupant when we run the findings. Therefore, the actual interest rates are owner-occupied rates as well. All right, that's the big leg up. The smaller down payment, owner-occupied interest rates. And it allows you to do that. Now, on the flip side, where I think it's going to be more prevalent is it allows children to purchase a home for their aging parents or disabled parents. Okay, so as the baby boomer generation is getting older, and, there might be people that are in their, even my age or their 40s or 50s that want to put their parents into a privately owned home. Maybe they just don't need nursing care facility, what have you, right? They don't want to go to a home because it's so expensive. It's unbelievably expensive. Maybe they want to call an in-home nurse, what have you, right? I'm not saying that's the requirement for this, but basically they can purchase a home for their parents if they are unable to qualify for that home on their own, all right? So, and it's talking about income mainly. So let's say you have retired parents and they collect Social Security income. That's their only source of income. Maybe it's, I don't know, $3,000 a month. But with today's rates, today's cost of living, today's purchase price ranges on these homes is just a little outside their reach of them being able to qualify on their own. Well, in lieu of doing a co-signer situation, or maybe they have credit issues and they can't be on the loan at all, you can buy it as the child for the parents, 5% down, owner-occupied rates. Okay, it's called the Family Opportunity Mortgage. So the reason a lot of places or lenders are a little scared of this is because there might be investors out there that say, whew, this is a great opportunity for me to bring my parents into the fold and say, I'm going to buy this property and have my parents live in there, when they really are just going to rent it out to someone else and use it as an investment, right? That's the fraud piece that I think a lot of lenders and a lot of people are afraid of with this program. But if you ask the right questions, collect the correct documentation, I think that this could be a great opportunity for a lot of people in the market that might be in this similar situation. So again, it's a 5% down option, and we're going to structure it as an owner-occupied for the child buying it for the old elderly parent, or vice versa, right? The parent buying it for a disabled child. Now, the big thing here is we are going to ask some questions. We do need some sort of letter of explanation from the parents stating the situation, right? And when I say parents, I mean if I'm the child buying it for my mom and dad, and my mom and dad can't qualify for a mortgage, my mom and dad need to provide some sort of letter of why they're not able to obtain the financing and what the situation is. They do intend to occupy it, all this fun stuff. Because doing it after the fact, after closing, saying I need something showing that this is your address now, that's out the window, right? So we're going to collect some documents from the parents. We're going to at least reserve the right to occupy or to collect documents from the parents. Things like pay stubs if they're still working, or Social Security income documentation to show that they can't qualify for a mortgage on their own or for that price point. And the two other little caveats to the program is, if I'm buying it for my family, right, my parents, they got to look at my ownership history as well, right? Because again, this is where this fraudulent piece comes into play. If I owned 5-6 other properties and I have a rental portfolio, the likelihood of an underwriter saying that I'm going to buy this for my parents to live in is not going to happen, right? This is going to be something where, I own my primary residence. that's pretty much it, right? And I have to qualify with both my house payment and the next house payment that we are purchasing. So we're going to look at that. We're going to see if you have a rental portfolio. If you do, it's going to be a challenge to squeeze you into this program. And it also can't be a vacation spot, right? So I don't have a ton of clarification on this, and I'm going to start working on this since this is a program we're trying to bring some light to in our market. But when I say no vacation spot, you automatically think of, all right, this guy wants to buy a second home down in Miami or Miami Beach, and he's going to say his parents live there. Well, if his parents live here, again, another challenge, are they actually going to relocate to live there? We're going to just have to try to take someone's word for it. It's most likely not going to happen, right? It's got to be here locally or within your realm of closer to you anyways. It just can't be a vacation spot. I hope that makes sense. That's going to be one of those weird guidelines that we're going to have to try to kind of get through and make it make sense. There's going to be a little bit more of a common sense approach to this loan program than anything else. But I think it's a great opportunity for parents buying for their disabled children or for children buying for their elderly parents that can't qualify for a house. They want to keep them in a home. They don't want to send them to a retirement facility or a nursing care facility, which is even more expensive to do, and it minimizes that out-of-pocket expense. The rates are very, very attractive because it's designed as owner-occupied, and it's a great opportunity to utilize this product and keep your family closer to home and comfortable as well. So that's all I got for you guys this week. If you do have some questions about that program, do give us a call at 937-497-9662, and we can have a consultation about how that's going to work and the situation that you are currently in. Other than that, guys, check us out next week, and remember to subscribe to our YouTube channel. Check us out on Spotify and Apple Podcasts, and we will catch you all next week.